you haven't heard about Anchor, it's simply the easiest way to make a podcast. It's free. They're creative tools that allow you to edit and record your podcast right from your phone or your computer. They're distributed to Apple Podcasts, Spotify, and many more platforms for you. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started.
What's going on, podcast family? Want to thank every single listener out there tuning in to the Stocks is Talking podcast with Ibn Getz. Very quick disclaimer, everyone. Please keep in mind, Ibn Getz, we are not financial advisors, people. We are simply two guys that love investing and we love to talk about it. At the end of the day, it's important to trade at your own risk. It's important to do what's best for your portfolio and always use discretion when trading in the markets. Welcome, world. Welcome to another edition of the Stocks is Talking podcast with Ibn Getz. I'm your co-host, Ib. Getz, what's going on?
What's poppin'? Let's get it.
Let's get it. Episode 6. We are rolling, cuzzo. Did you realize that? We going. We doing our thing, man. Getting a lot of traction. The people are talking along with the Stocks is Talking. So that's a great thing. I want to get right into something really quickly. And I've noticed, I feel like I'm always bringing up crypto as soon as we get going. I'm going to get back into it again. You might have to start calling me Crypto Id. I don't know. It's just something I came up with. But Doge, I don't know if you remember, last week I said Doge was dropping. And what was I doing? Buying. I was buying on the dip. Buying. Well, now, and I'm going to give everyone live numbers, Doge is at 37 cents. So if you go back to last week's episode, Doge was at about 25, 26 cents when I'm saying I've been buying all the way to the point where they were down to 15 cents and I was buying in. They're back up to 37, 38. I'm doing well. I'll say that, Getz. I'm doing well on it, but it's not just about what I'm doing with it or bragging about how right I was, even though I was hella right, as we tend to be. But I want to talk about the catalyst, because I think you brought up catalyst last week. There's a catalyst as to why Doge is doing what it's doing, and it all comes back to a influencer has been tweeting about Doge. Right. You know who that influencer was?
I can take a guess.
What's your guess?
Elon Musk.
Elon Musk. I'm not sure if you're tracking, but he threw out there last week, he called himself the Doge King, as he mentioned that he would be on Saturday Night Live this coming Saturday. So I think
it was the Doge father. That's what it was.
Oh, no, my fault. The Doge father, yes. Not Doge King, the Doge father. And I think ever since then, it's kind of been booming. And now there's a lot of rumor that on Saturday Night Live, Saturday coming up, he's going to actually talk about Doge again. So I think if something like that happens, it's going to be a nice additional catalyst to keep it pushing. But that kind of goes back to, you mentioned last week how these influencers will talk about what they're doing and drive the stock up and then get quiet. And we reference that as the pump and dump scheme.
Right.
I'm hoping this isn't a pump and dump, because I feel like Doge is one of those things where I think this is really a long-term hold, my personal opinion. I don't know how you feel, but I'm here for all the one-ups. I'm here for Elon talking about it, tweeting about it, mentioning it on Saturday Night Live, because people think that might be the catalyst to push it up to $1 and beyond if he gets on Saturday Night Live talking about Doge. Yeah. So I'm tuning in.
Right. Yeah. I mean, it's definitely doing its thing. I'm actually looking at it right now. It's at 38. Yep. I don't like when they get up here and pump it, but I do like Doge. I wish I had noticed it when it was down, around 16. I definitely would have been buying like you was.
That's my fault.
Somebody didn't let me know, but
that's my fault, Gets. I should have sent you a text. I'm not gonna lie, I had my own personal Doge day where I was buying it up while it was dropping.
Yeah, ain't nobody say nothing to me. So I did buy some while it was down, but I didn't see it hit the lows. So it is what it is. I got mine, and I've been sitting on that. But
something's better than nothing.
Yeah. And I mean, there's still a lot of catalysts, for it. I mean, we see it's being accepted more, and so I'm definitely feeling Doge. If it dips again, I'll be in there. I'll be buying.
Yeah, I think I shot you a message. Another platform within the last couple of weeks included it on their platform as a place where you can buy and trade it.
Yeah, Webull.
There you go. Okay.
They added it before Doge Day, but they had a lot of issues, and I noticed on that day their prices seemed to be lagging. There was some kind of issue going on, so maybe it's just because they just added it. It was still kind of like a beta.
Okay.
But there was some issues there because I do have Webull, so I got the notification about it. I didn't buy any on Webull.
Okay.
I'm already holding it on Robinhood because that was one of the easiest places to get it at the time before it picked up steam. So I'm like, whatever, I'll just continue holding it there.
So I'm holding it on Robinhood. Do you have any concerns? Because I've been hearing some chirping about how people are actually looking to try to transfer their Doge holdings over to their Trust wallet because they're feeling some type of way about Robinhood. What are your thoughts on Robinhood and sitting on something like Doge? So if that thing does happen to hit $20, are we able to easily sell and get out and have that cash? Or do you feel like Robinhood's going to try something funny like they did with AMC, like they did with GameStop?
That stays a risk. I mean, they're supposed to be adding the functionality to be able to move any of your cryptos, but it's not there. So until it's there, there's always that risk with Robinhood, whether it be stocks, whether it be crypto, whatever you're doing with Robinhood, you got to know that's a risk because their infrastructure and the way that they do things ain't always on the up and up. It just is what it is. You know that when you deal with them. Just like I brought up the fact that I think there's a lag when you're looking at the charts and everything like that. They've already admitted that they get paid for order flow. That's how they make money. You as an investor, when you're using that platform, you're not the customer. You're the product. You know what I mean? The same thing as using Facebook. When you go on Facebook don't make money off you. It's free, right? So you're not the customer. You're the product. Facebook makes money off ads.
That's a nugget,
right? Okay. You know what I mean? They're selling ads, but I mean, the ad companies come to them and pay them billions of dollars, and we just seen the crazy quarter that they had, right? The ads are getting targeted to somebody, and it's you, because you're you're the product, right? They're making the money off of you. Everybody, this is, when this all first started, and I think Facebook was kind of the innovator when it comes to that, making the end user the product, because you look at it, it's just like, all right, this is free. But nobody's looking at the fact that
how are they monetizing?
Right.
Like how are they making money if it's free for us?
Right. It's just because it's free for you. There's no such thing as free.
Never. There's never such thing as free.
Especially you talk about a publicly traded company. Come on.
I never really thought about that. And I'm sure a lot of people out here never thought about the fact Facebook is a publicly traded company and none of us spend a dime to utilize the platform. Outside of if you want to start boosting ads, if you have a company where you want to boost ads and boost advertisements, that's where you might pay. But for the average person on Facebook, you're just on there searching, looking, screen watching for free.
Yeah.
But they're getting money somehow.
Somehow, you know.
And it's because we're the product.
Yeah, we're the product. It's the same thing. You walk in the store and use your debit card. It's you spent what was available in your bank, right? Mm-hmm. But MasterCard, Visa, Discover, Amex, they make money on both sides. They getting paid for transactions. So if you're using a credit card, they make money off your interest. And then on the other side of it, they make transaction fees. You know? And maybe you dealt with this as a business owner. I know I dealt with it as a business owner. You know, that was one of the things you had to worry about is, you know, all right, I gotta make sure that my prices are according to, you know, to make sure
how much they're gonna tax me.
Right, because they're gonna tax you, 2%, 3%, whatever it may be.
Yep.
There's a cost. Nothing is free. You know, the person walking in the store and swiping the card feels like I'm just spending what I have, or what my available credit is. But no, that's not all there is to it. You know, there's layers. It's an onion. There's layers to it. You know?
You gotta peel it, and the more you peel, the more your eyes will water when you realize just the kind of money they're getting off of you.
Right.
When you really look at it.
Yeah, and there's so many middlemen. You know, I mean, you think about it. So it's like you look at Robinhood, and they're saying, "All right, yeah, we sell order flow." So they're selling your order. So it's not just there's a spread. So the fact that they could sell your order, right? You spending $100 on some stocks, and they're able to sell that $100 trade to somebody, and then somebody's able to make, you know, they're able to make enough that they're willing to pay Robinhood for your trade, right? And then the person on the other side that's selling the stock is still getting their piece, but nobody sees that in between.
Yep.
Nobody sees that in between, so nobody's thinking nothing of it. But I think that's why there's a lag to it, you know. So I have an issue with Robinhood and the way they do things, and that's why I've made adjustments in the way that I trade. If I was still day trading, I was thinking about it today. I miss day trading. I love day trading. I've made so much money day trading. If I had the free time to just day trade, and I've thought about just walking away from everything, just day trade.
Just day trade, true.
Yeah. If I had the time to day trade, it would be lovely. But since I don't, and Robinhood is the main way that I trade, when I invest, the main thing is M1. I have my pies. I have my recurring buys set up. So every week, money's just going in.
So your long-term holds.
Yeah.
Not dipping and dabbing in and out.
Right. You know, the long-term holds, it's an M1. I have the pies set up, and the money goes in every week, no matter what. And at the same time, if I feel like there's a time when I should be adding more to it, I can. Right. I can just set up a single buy, you know, and just drop 1,000, 5,000, 10,000, whatever I want, just in there, right? But when I'm trading, I've been using Robinhood just because it's free, it's easy, you know. Robinhood, that's what they're good. Robinhood is a casino, you know.
Explain that to me.
Robinhood has made it so easy for everybody. Just like if you walked into the casino, right? All you got to do is walk in and just you know, exchange your money for some chips and just drop them on the table, right?
And gamble.
And gamble, win, lose, or draw. And that's why you have all these people coming into the market. And I can't wait till Robinhood comes out because it's supposed to be going public. I can't wait till the actual, the filings come out before they, so we can actually see what's going on. Let's look under the hood and see what's going on with Robinhood. You know?
So that's interesting that they're going public, because I have a question as an investor. Is Charles Schwab publicly traded? Is America Trade, TD America Trade, or whatever it is, are they publicly traded? Like, are all these companies publicly traded? And
yeah,
what is it about Robinhood?
I think Charles Schwab bought I think they bought TD Ameritrade. I'd have to double check. And then somebody bought E-Trade. And I think that's a just the market doing what it will, because you have companies like Robinhood coming to the market, right? Mm-hmm. And they offer free trading. So you're gonna have the people, the really big investors. I feel like they stick with those names, TD and stuff like that. Mm-hmm. But Robinhood attracted so many people because it was free, and nobody's thinking about, well, what's the actual cost of it, right?
Yep.
So they lose all those traditional brokers, the old guard. They lose so much. They lose all these users to Robinhood and Webull and Public and SoFi and all these companies, right? Mm-hmm. So now you have consolidation in the market of brokerage companies.
I'm looking at Charles Schwab now. They're trading at $70.40. That's what they closed out on Friday.
Okay.
That's interesting, because I just never considered looking into Charles Schwab as a potential stock to purchase. It hadn't even crossed my mind until this moment that they're actually on the exchange to buy.
Yeah. And
they're not that expensive. I mean, $70 for a company
what's the market cap though?
The market cap is $132.72 billion.
Okay, and they did buy TD Ameritrade.
They did buy TD Ameritrade. Are you telling me or are you asking me?
I'm telling you.
Okay, and they bought TD. Okay. Yep. And I'm getting
and Morgan Stanley bought E-Trade.
They bought E-Trade. Okay, let's see what they're trading at. And I'm getting all this right off of Yahoo Finance. So anybody tapping into us, this is a simple Yahoo Finance search allowed me to see what Charles Schwab is trading at, what their market cap was. So when it goes back to that smart money investing, it's simple things like that, using these certain platforms to know where you can find info.
Right.
You mentioned Charles Schwab being publicly traded. I typed them into Yahoo Finance to see if they was available, what the stock symbol was. Boom, I got it. Got all types of info. I see their 52-week high, low, the whole nine. But I'm about to look into TD Ameritrade. No, who bought TD Ameritrade?
Charles Schwab bought TD, and Morgan Stanley bought E-Trade, and Morgan Stanley's trading at $82.55 right now. Their market cap is $154.286 billion for Morgan Stanley.
Yep, I see that. So where are you looking at it at? Because I see
Yahoo Finance.
154.29. Okay.
Yeah, I'm looking at Morgan Stanley on Yahoo Finance.
Yahoo Finance.
Yep.
Okay. So, have you ever looked at buying those? Buying one of the exchanges?
I've never had an interest in buying them, honestly.
Okay.
Have no interest. I've bought banks, So, you talk about Morgan Stanley, and I never thought about buying Charles Schwab. And honestly, that might have been a personal issue with me and Charles Schwab, because after they bought Options Express, I just hate Charles Schwab. But I have no interest in buying them. But Morgan Stanley is a bank,
right?
And I haven't bought Morgan Stanley personally, but I have bought plenty of banks. I've invested in plenty of banks. I've made plenty of money with plenty of banks. JP Morgan being one of my favorites. But
speaking of banks, real quick, Getz, I just gotta share how hurt I am, because you mentioned banks just now. So let me take on Bank of America. Yo, this is hurting my soul. Bank of America is trading right now for $40.53. Do you know why I'm hurt?
Would you have that, and would you sell it at? I already know where this is going.
I had Bank of America. This is maybe 4 years ago at this point, 4 or 5 years ago. I owned Bank of America at $7, Getz. $7. I bought them just off the strip. Like, it's Bank of America. Let me buy. And I'm gonna put my pops out there on the podcast network right now, live. I'm blasting them. Again. He gave me a lot of pushback on Bank of America. Whoop whoop whoop. You should get your money out, blah blah. So I ended up trading Bank of America at like maybe 7 and some change or 8 and some change. I didn't make that much, but I just got out because he was giving me a hard time. And then, here's the funny part. A year or two later, he was like, oh, you still got that Bank of America? Because I got it. And it's at 10. I'm like, no, I traded it because you were hitting me over the head about how it's a bad move. And now I look at it and it's at $40. I had a good 50 shares at the time at $7. So it just goes again. And I think I've said this before on the pod. If you have an inkling in your heart and your soul about a stock, about its potential, do not let anybody talk you out of it.
Right.
Just don't do it. Because a couple of years down the line, you'll look at it and be like, man, I wish I held. And I'm a little salty, but I'm gonna let it go. But yes, I had Bank of America at $7, and it's at $40. I'm slightly irritated, and we're gonna have my pops on the pod at some point, and I'm going to put him on blast so he can explain himself to the audience on why he talked me out of these things.
Right. Speaking to that point though, at the end of the day, when you're making your trades, it's about your conviction. So you have your high conviction, low conviction, mid conviction, right? So when you're making up your plan for your trade, what's your conviction on the trade?
True.
Right. So, and we've both grown as investors and as traders.
Yep.
So there was a time when we didn't understand conviction, and it was easy for someone to talk us in or out of a trade. And now we're at a different point in our lives. We're playing with different amounts of money. And just trading differently and investing differently.
Facts.
If you can always hindsight is 2020, hindsight is a bitch. You can look at it and be like, man, I had this at $7. I can't believe this. But if you're worried about that, then you're not worried about the future.
True.
So it's about your conviction on your trades now. It's just like Doge. Doge is dipping. What was he doing? You was buying, right? You was going in heavier. That was conviction.
Yep.
You showed your conviction because you put your money where your mouth is.
Ooh.
And now you're getting paid for it.
That's you're preaching right now. Conviction is key, and the conviction comes in at when you're doing your due diligence.
Right.
When you're doing your research, when you're paying attention to what's going on in the market, with that stock, with the world in general, that's what helps build that conviction or break down that conviction.
Right.
I mean, that's a great point.
Yeah. Any kind of investment that you make it, you gotta. What's your conviction on that investment? I mean, it's like whether you buying property, you buying stocks, you buying a business. What's your conviction? Are you in this for the long term, the short term? Are you in it to make a quick buck? I mean, if we both day traded. You're day trading. There's no high conviction on nothing. It's just, it's like I'm in and out. You seen how I day trade? I scalp. I'm a sniper. I'll be in and out of trades in 10, 20, 30 seconds. I've had trades where I've made $1,000 in 20 seconds. And there's no conviction.
Yeah, it's no conviction, but there's something there though. If you're a day trader and you get in and out in 10 to 20, 30 seconds, something told you to get in and get out. It may not have been conviction. What is that thing as a day trader? You know what?
Maybe there is. Maybe you have conviction, but you have conviction not on the company, but you have conviction on the chart.
The momentum. It's a momentum thing.
Right. You looking at the chart. At least what I used to do. I read the chart, and I know how to read the chart. I know the certain signals. I see the signal. I have high conviction in the signal. I don't care about the company. Right. The company can go bankrupt tomorrow. All I care about is my in and out. Right?
Yep.
So, and maybe I never plan on being out of a stock, out of a trade in 10, 20 seconds. But it's like I've had them where they lasted hours. I had one where, it was like I had something to do like 3 hours later, and I was like, I'm gonna make this trade real quick. And then 3 hours later, I was still in the trade, sweating bullets, right? As I'm going to do something else. And I keep, every chance I get, I'm looking at my phone, trying to see where I'm at. And then, but the conviction was still there in the trade, not in the company, just in the trade. And I think I actually doubled down on the trade, which risky as hell, right?
Okay.
And then,
so when you say you double down, what you mean?
I bought in more.
Okay.
I added to the trade. So now I'm in this trade for a bunch of money, and it's 3 hours later, right? And I'm like, I just want to be out before the market closes, right? It was never my intention to even be in this trade this long, but I know this is gonna pan out. So that's my conviction, is in the trade. So I doubled down on the trade, and then 20 minutes after I doubled down, I get out with my money.
And then you can go about your day.
And I can go about my day. Now I'm stress free. I got more money in my pocket, right? Like I'm good. My net worth has just increased by whatever, 1,000, 2,000, whatever it may be, right?
Hey,
I mean,
I promise you gets to that point of day trading in and out. And I feel like I might have been talking to you. I don't know if you remember this. This was years ago. I was on my way to like the dentist or a doctor's appointment, something. I was in traffic driving, jumped into an option, literally made $700 from my house to the dentist's office in my car. I sold it, and I feel like I was talking to you. You might not remember. I remember telling like, yo, I just made $700 driving to the dentist appointment. So I say that to say, or to kind of validate what you're saying when it comes to day trading and in and out, and not really conviction on long term, conviction for the moment. Momentum conviction. We might have just that might be a phrase we just coined, momentum conviction. So I've never heard that, but having conviction, and it's all about reading those charts, and that's something we need to get into at some point. What are people really looking for in the charts to let you know, hey, this is a day trading opportunity? When you're looking at the chart, what are you looking for something like that?
Yeah, I mean, we definitely got to get into it at some point, and there's a lot of different patterns to look for, and the fact that you call something a pattern, patterns repeat, right? So you once you go and you learn these patterns and these signals to look for, then it's a lot easier to go and trade them, and day trade them, I mean, and dude, there's been plenty of times that we've been having a conversation, and it's just like we're in trades, during the conversations, or we get in trades during the conversations, and just be hitting, I think Nvidia was one years ago where it's like I did it 2 days in a row. I got into it, and this is early on, not even fully understanding how to trade. I get in a trade, pull down, a few thousand within like whatever it is, an hour or whatever it is. And the only reason I even got out of the trade was I didn't understand limit orders and things like that, right? So I put in a stop limit or something. I get stopped out of the trade, and then I go to get back in the trade. I don't understand what margin accounts and all that. So I can't get back in the trade because I don't have margin,
the capital,
right? Right. I don't have the capital, even though I didn't want to be out of the trade because I knew the trade was going to go so much higher, right? So I take 3,000 out of what would have been like a $30,000 trade, right? So I'm mad, right? So the next day, when it clears, because the options trade, it only takes 1 day. Unlike stocks, which take 2 days now. I think back in the day it used to be 5 days, and then they went to 3 days, and then went to 2.
Now, when you say 1 day, 2 days, you mean it 1 day for those funds to clear?
To clear.
Okay.
So I think stocks is 2 days now, but I think back when we started, I think it was either like 5 days or 3 days. Right?
Definitely.
So I'm trading the option. So the next day I go back to my account, the funds have settled, so they allow me to trade again. I do the same thing again. I get in the trade. I'm up, a few $1,000s, whatever it is. And then, I think I understand it better. So I set the limit order or a stop limit, and I get stopped out again. So I miss out on another like $20,000. And I'm like, this is BS. So, so after that, I'm like, I need to understand this. So then I go and I study limit orders and trailing stops and all that stuff, right? So that, because I'm like, this can't happen to me again. Y'all cost me $50,000 in the last 2 days. Off of, I think it was like $700 that I put up.
Don't you hate that?
Yeah,
that's the one thing I hate. And again, we can't be too choosy because we do make money at the end of the day. But there's been so many times where it's like, if I would have stayed in, or if this would have happened, that trade that I thought would have gone up, went up to the point where I would have made 20, 30 racks, 10 racks.
Right.
That just hurts my soul. But it lets me know if I stick with it, if I keep at it, continue to be patient, continue to have that due diligence, and continue to work the strategy, I'll hit those big ones.
Right. Yeah, because you're improving every day. You're evolving.
Exactly.
As a trader,
And that's what it's all about. You got to evolve.
Yeah, every day you should be better than your last.
Yep.
And that's all it is.
Today's episode is brought to you by Nice Touch Editing Services. Nice Touch Editing is your one-stop shop solution for all of your content writing and editing needs. Whether you're an author looking for an editor for your book manuscript, you need a resume and cover letter to go after that new job opportunity, or if you're a small business looking to go after that latest government contract, Nice Touch Editing is the premier writing and editing solution. Feel free to reach out, www.nicetouchediting.com. Nice Touch Editing Services. Now that's a nice touch.
So as we're sitting here chopping it up, Gets, there's something you touched on I want to dive back into very briefly. Is that okay with you?
Let's go.
So you mentioned limit orders and market orders. You kind of breezed through it, but and it's crazy you mentioned it because it was something I specifically wanted to bring up in today's pod, because I had a very personal experience when it comes to these orders. I was actually, and it goes back to Doge, I was helping my mom's. She wanted to buy some Doge. She's been listening to the pod. She's heard me talk about Doge. She's like, hey, I want to buy some. I want to make money. It's like, all right, cool. Like, I gave her the whole, hey, like, there's no guarantee. You could lose money. You could make money. But she's like, look,
investors.
I gave her the whole disclaimer. I'm not a financial investor. She was like, look, I get all that. I know the risk. I want to get in on Doge. I'm like, all right, cool. So I was walking her through the Robinhood purchase, and something came up where it was pretty much asking her about putting in a limit order or executing it at market. Mm-hmm. And she was like, okay, like, what is this? It's saying limit order or market. I don't really know what to do. So I helped her through that, but it hit me. This is something we got to talk about. So I want to kind of address the market and limit orders. So this is my understanding. This is kind of how I roll with it. A limit order comes into play, let's say for Doge, for example. Doge is at 25 cents. Doge is at 29 cents, right?
Mm-hmm.
But you think it might go back down to 25 cents. You want to buy on the dip. That's one thing we always preach on Stocks and Talking podcast with Ibn Getz. It's something we talk about on our socials. If you're not following us, you need to. Instagram, IB_Getz_podcast. Facebook, Stocks and Talking podcast with Ibn Getz. So that's one of the things I talk about, limits. So if it's trading at 29 cents, you're thinking it might dip down to 25 cents, you want to buy on that dip, you can set a limit order to say, hey, execute this trade only if it touches 25 cents. If it gets to 25 cents, buy me 100 shares.
Right.
You put that limit order in, it is not going to execute unless Doge hits 25 cents.
Right.
Correct?
Or lower.
Or lower. 25 cents or lower. Like that's the limit though. The limit is 25. I want at least 25 cents. Market order means, hey, Doge is trading at 29 cents right now. That's what the market value is at this current moment. If you put it in for a market buy, it's going to execute your trade at 29 cents.
Right. Whatever. Yeah. Whatever there's whatever somebody's selling on the other side for.
Yep.
So you get the high of it, the low of it. I mean, it is what it is.
Mm-hmm. So I wanted to kind of touch on that just to kind of highlight that for people who are maybe new to investing or have been investing for a while, but they only do market limit orders. A limit order is something you want to look into, because this is something that I've done a lot with my options trading and my just general stock investing. I'm not going to lie, Gets, lately I've mainly been focused on my cryptos. So a lot of my stocks are just long-term holds. I haven't done any options trading lately. But when I do my options trading or I do buy into a stock, I'm typically putting in that limit order because I want to buy at the dip. That's just my thing.
Right.
So if I see a stock, and this is just another practice that I tend to go by, if a stock is currently in the green, meaning it's going up, I don't necessarily want to buy. I could be crazy for that thought, guys. You let me know. But I don't really want to buy when it's going up. If I start to get that conviction that you talked about for a stock, it's like, okay, I have high conviction. I know I want to get in because of this reason, that reason, and the third reason. I want to buy. I'm going to sit back and wait. And I've done this with Forex trading, which we haven't got into Forex. We're going to get into that at some point. But I'll sit and wait till it goes into the red. Once it goes into the red, I'm going to buy because my conviction is strong enough to where I know it's going to go up, or I'm assuming it's going to go up eventually based off of the research and due diligence I've put in. But I never want to buy a stock as it's booming and zooming. You don't want to do that because you want to buy when it drops so that you can be a part of that stock going up. Like you want to be in it while it's going up.
Instead of being a bag holder.
Instead of being a bag holder. That's one of your key phrases you've brought up time and time again, but it's so crucial. I never want to be the bag holder. And I've been that guy, Gets. I'm sure you have too, which is why we know it's what we don't want.
Right.
You know, you got to go through it and live through it to understand what you do want and what you don't want. That's with anything in life. But when it comes to these investments, we know for a fact we do not want to be bag holders. So I am not trying to buy a stock as it's taken off. I want to buy it when it pulls back, when it consolidates. Whatever that lingo is you're comfortable with using, I want to wait.
Right.
So market order and limit orders. And those limit orders come in handy if you see a stock going up, but you have a feeling it might pull back and then go up eventually. You want to get back in on the pullback, put your limit order in. Limit orders are crucial. Yeah. So to my moms, you might end up listening to this pod. You inspired me to talk about market and limit orders today. Congratulations. Thank you for the insight.
Yeah. You know, it's one of the main things marketers have come in handy for me is when a stock starts to turn and I want to get out and it's moving quick and you're trying to get that limit, and you can either, unless if you can get ahead of it, if you can set your limit, you know, let's say you're you know, way up on a stock, or even if you're taking a loss and you know there's a number where you could put in a limit, it hasn't hit it yet, and you can put that limit order in and get out. Then, you know, if you're lucky, get a limit order. But there's been plenty of times where I've been in a stock and it turns on me and it's going the wrong way, and I just want out. I want out right now. And you know, you try to set a limit and it blows through it before you can even finish setting your limit order. Then you can mark it out. You know, you just do a market order just to get out of it. You know, right? So you don't end up losing. You know, it's like you got to make a decision. I could take a loss of 20% right now, or I could lose 60% if I try and hold. You know, and you know, and you know this. You know, actually, I'll bring something up that I went through the other day.
Okay.
We was talking about Cat.
Cat, which had earnings last week, I believe.
They had earnings last week, blew it out the water.
Okay.
Now, along with a lot of other companies, and with all these companies, they blew earnings out, and then stocks were dropping, which that was that irrational part of the market
that you can't account for. Who would
you can't account for?
Yeah. Go ahead.
Yeah, there's a lot of, and you know, there's a bunch of things that you could say there's reasons why it happened, but to me, it's irrational. You know, I listened, you know, I'm listening to the earnings and I'm looking at everything. I'm looking at the numbers and I'm like, all right, they beat earnings, you know, top and bottom line, you know, they beat it by so much, not even close.
So you think the stock's about to take off? No.
So overall, I think it's a good stock and it's going to continue up. It's on an uptrend. It has been on an uptrend, and I think I've spoken to you before about Cat, and I've made plenty of money on Cat.
Cat, which is the Caterpillar. Yep.
Right. So I'm in this trade, and this is where the intersection of investing and day trading, right? Where it kind of, they didn't align this time, right?
Okay.
So I have this trade set up. Did not know about earnings. I don't know how I missed this when I was going through all the calendars. Did not see that there was earnings for Cat. So I have this trade set up, but it's only good until June or July. Options trade.
Okay.
Right? I'm in this trade. I'm up 20, 30%. I find out about earnings. I'm like, I hate playing through earnings. But I said, I know they're going to blow it out of the water. I already know, because this is a recovery play, right? Things are opening back up. From COVID.
Okay.
Right?
What does Caterpillar do?
Caterpillar's they build construction equipment. You know, when you see the cranes and the you know, and all these other pieces of equipment, you know, and the Caterpillar makes all this stuff, and they're one of the leaders in the industry, and they're big in China too. And this is my thing, was it's not just about North America, it was about China, because if China is getting back on track, and one of the things China does to inflate their currency and their economy is build, right? Just like America does it too. You know, Biden came out, he's an infrastructure plan. What do they do whenever we're whenever we're in a recession? Infrastructure. We're gonna fix bridges, fix roads, right? I'm like, you know, at the end of the day, what's that do for somebody who's washing dishes? Nothing, right? True. But it you know, it's going to create all these jobs. That's great. It creates jobs for people in construction, whatever. But this is what these countries do. They lean on infrastructure, right? So I know China, they build cities that no one lives in. Just it's how they inflate their economy. It's inflation,
right?
So I have this trade on. And like I said, I'm up on the trade, but I wasn't up on the trade as much as I planned on being up on the trade. So I held it.
Okay.
And then I found out about earnings. And reluctantly, I hold through earnings. Earnings come out. They blow earnings out of the water. I hit you up because the stock is way up.
Yep.
Right?
Yep.
I'm like, this is crazy. I'm like, and one thing I worry about is I hate to see a stock go through the roof while the market is closed, because that gives it time to come back down to earth.
Consolidate. Yep.
Right. I don't like that. I'd rather it do nothing in the extended hours and then move heavy.
Come out. Yeah.
Yeah.
Exactly.
So, but it moves crazy. So, all right, whatever. You know, I hit you. It's like it's near. It's like I think it's near the all-time high or the 52-week high. And I'm like, man, if it stays near this number when it opens, like this could be some good money. You know, I had a good amount of options on this. The market opens, it's still up. It's not up as high as it was, but it's still up. I'm like, all right. Before I could do anything, it starts tanking. So now here I am. I said, okay, I'm not going to panic sell.
Which a lot of people do. A lot of people panic sell. They see that thing pull back and they jump out.
Right. Which is what leads to these huge sell-offs, right? Because people see something, the price just dropping on something, and it's like, I got to get out, right?
Yep.
I leave emotion out of it. So I say, I'm not going to panic sell. I need to know why this is selling off.
Because it blew earnings out the water.
It blew earnings out of the water.
So logic would tell you the stock is going to blow up.
Right.
In a good way.
Right. So I finally find it. The CEO or somebody made a comment about the semiconductor shortage causing an issue with them fulfilling demand. Now me, I'm looking at this and I'm like, man, I wish I had that problem. That's a good problem to have.
The demand is higher than the supply.
Right. But the market is saying they can't fulfill demand. Let's sell the stock. I'm like, this is dumb.
Which doesn't even make sense for a long term. Like
right.
If the demand is high, that's telling you that this is a company that can continue to grow because the demand for the product is there.
It's so high. There's so much demand. It's like, look, here, put your name on this list and we'll get back to you. Like, I don't understand the issue, right? So what I do when it's down near its lows, I buy more.
Bought the dip.
I bought the dip. It goes back up. It's jumping around all day. Up, down. Finally, I decide I get a free moment. I do some research on the option that I have because I'm going more towards long term with my options plays. Playing the leaps 2022, 2023. You know,
going out there for a while, for a few months.
Right.
Year. Yep.
Yeah. But the option that I have on this one is only good until June or July. Right?
Okay.
So I go and I look at it, and in my looking at it, I realize, well, my delta has dropped significantly, right? My delta is down to like a 0.09. So that's my multiple. For every dollar that the stock moves, you're gonna get, you know, if your delta is 0.25, you know, you're getting 25 cents per dollar that it moves. My delta is down to 0.09. So it's dropped so much that I'm looking at that and I say, okay, even though I have time left, every day I have less time, which is decreasing the value of this option.
Yep.
Right? Your theta. So my time value is decaying. My delta is super low. So this option that I know was worth so much money to me, I'm down 20%, maybe it's 30%. Well, I forget what it is. As much as I don't want to sell it,
the indicators are telling you to get out.
Yeah, right. So I say, I'm going to go ahead and I'm going to sell it. And I'm going to set myself up for a longer play on CAT. You know, because I also went and looked at the charts. And I said the charts are prime for the next leg higher, right? Right. Because it's down. I've been eyeing this stock for so long, and I've made money on this stock as it went up. So I'm going to go ahead and give back some of these gains right now and preserve the rest of my capital. Because, I mean, you could take a 20% haircut now, or you can hold and take an 80% haircut. I'd rather give up the 20% and because I've made plenty of money on them, I'm giving back gains. Right.
And not giving back capital or that initial investment. Yep.
Right. I'll give back some of my gains. Y'all can have that back for now. But I'm gonna come back into it and buy, hopefully the market, I'm hoping the market stays irrational for, a little while longer. Give me a good position to buy in.
And so that's what it's all about.
Those
positions. Getting in at the right point.
Right. So it's like, go ahead, sell off some more.
Yep.
I'll let this go now and then let it sell off some more. And then, I want to get back in at a good spot. I want to buy out till 22 or, 23. And, and my thing is, as long as, every time it moves up, I'm not buying if it moves up.
Nope.
I'm in a good spot.
Yep.
But if it dips, now I have time on my side. Now I'm going to be buying that dip and lowering my dollar cost average, right?
There you go. Yep.
And Cat was the only one that I had that was short term. Everything else is expiring in 22 or 23.
Right.
So everything else I've been buying on the dips, and it's crazy because I have days where I'll look at some of these plays, it's like I'll be down and I buy. And then when they run up, I see my percentage that I'm up is so much higher. Because I bought on those dips.
Buying on that dip.
Right. I'm like, I'm loving it. Some people, it's like they see their portfolios down and you get these market sell-offs because, people they're putting in those market orders. They just want out. They want out. They gotta get out. Yeah, I gotta get out.
Let me lose my money now, because that's what you're doing. If you get out when it's at a loss, and again, you got to operate and do what's best for your portfolio, but you're not losing or making money until you sell that stock or option.
It's realized then. Once you sell it, it's realized.
Yep.
It's until you sell, it's unrealized. So you could be down on something today. And you hold it, as long as you holding it, it's unrealized. So you're not up, you're not down, especially because your money's in the market, right? So you shouldn't have money in the market that you can't afford to lose anyway.
Every piece of money you have to the very last penny that you've invested, you've got to be comfortable with losing all of it tomorrow. Losing all of like every last penny tomorrow. If you lose it, it's not going to now leave you unable to pay your bills tomorrow, unable to put food in your mouth or your family's mouth.
Right.
That's if you can't invest like that, then you should not be investing. That's reality. That's facts.
Yeah.
If you're investing something, hoping that it goes up, and if you lose that money, you're going to be destitute tomorrow, then we do not advise you to invest at all.
Don't invest.
You should not. That's just real talk. That's not being funny. That is dead serious.
Yeah.
Dead serious.
Yeah. And what the problem is when you get into like a Robinhood, because Robinhood is like the casino, right? We was just talking about it.
Yep. So
people they're gambling with money they can't afford to lose. It was something, we used to talk about, the guys who they're flashing their re-up money, right? Not to I ain't gonna get too into that, but
no doubt,
But it's like you got the guys who, it's like you have the guys who actually made it, and then you have the others who are trying to keep up with the Joneses, right?
Yep.
So they're out here flashing. It's like, all right, I spent $300 and I made $400. Well, no, you didn't make 400. You made 100.
100. Right.
But you're flashing a 400, So now you're out here and you're flashing with the total amount. You're not saying what the gain is. You
gotta put that 300 back in.
Right. It's like how are you gonna move on to the next level, keep moving up. You got to put that 300 back in.
Yep.
Now, if you go spend the whole 400 because you're showing off, you bought a bottle or something, you know, now where you at? Now you back to square one, you know, yep. Or you bought you bought some jeans, or you bought, you know, whatever it may be, you know, it's like that's not how it works, you know. So you got to be willing to lose whatever it is.
All of it. There's something you touched on. I want to slide back into very quickly. Right. You mentioned how that option with CAT, how the delta was so small, you realize you probably need to get out, because as the time decayed, also your delta wasn't that high, which meant as the days go on, you're not going to make that much money. I want to touch on what exactly a delta is. So I did a quick Google search to give the people some game right quick. Delta, which measures how much an option's price is expected to change per dollar change in the price of the underlying security or index. Underlying security means the stock option. So you had CAT. So CAT is the underlying security. For example, a delta of 0.40 means that the option's price will theoretically move 40 cents for every dollar move in the price of the underlying stock or index.
Right.
I thought that was important to let the people know, because when you're doing options, it's so much more to than just saying, okay, I think it's going to go up. It's also looking at these indicators. How much time do you have? Are you getting a weekly option? Weekly option means it's going to expire that Friday. So is this something that's going to expire that Friday? Is the delta 60 cents, 70 cents, 80 cents, 90 cents, $1? You want to get the highest delta possible. Right. Because that highest delta means your option is going to move the more the index moves, the more the stock moves. So you want to pay attention to those deltas. And you can check. Now, where do you go to look at your deltas?
So I use TD. I use Thinkorswim.
Okay, Thinkorswim. So I know for everyone who might not be on Thinkorswim, you can also find your delta on bar chart. Have you ever seen that on bar chart, Getz?
Yeah, I have. Yes. I have. So, you put me on a bar chart, and I do use it occasionally. Yeah. But I have that Thinkorswim account, and that's what I'm comfortable with.
There you go.
I use my Thinkorswim, and I look at my delta. I look at my open interest, my volume. You know, I'm looking to see how many people are actually trading this or looking at this option.
Yep. All these things are crucial.
Yeah, and that's how I make my decision. So then that's how I made the decision to get into that option. You know, which was, like I said, before earnings was paying off really well for me. And because it was a shorter time frame, I should have been in day trade mode and just took in and out and just took the money because I was up so much, you know. But this is that crossroads where those two things, like I said, they didn't align.
Right. And it happens.
It happens. And I'm okay with it, because at the end of the day, I actually did my due diligence and said, I'm going to go ahead and sell this, preserve my capital so that I can use it to put towards going back into CAT at a later date.
In a better position.
In a better position.
Yep.
Because I still believe in it, but I didn't like my expiration.
Yep. So your conviction was still high, but the position you got in might not have been the best. But the conviction was still there.
Yeah. You know, and the other thing of it, I was way out of the money, and that's why the delta dropped so much.
Way out of the money.
Yeah. Yep. So CAT was, I think the high I had saw on CAT was 237. I got
for
into it around
for the year.
Just for the year.
Okay.
So I got into CAT around 230.
Okay. And
they had run back up towards that high. But then they sold back all the way back down to 224.
So
and I'm like, that's crazy.
Push it all the way down. Yeah.
All the way down, right?
Okay.
So even though I said this is irrational, I'm one man. I can't fight the irrational market.
Right.
Right?
I can't
Yeah, I can't beat the irrational market. I got to go with it. So so after looking at everything, doing my due diligence, all right, I need to sell this position and preserve my capital. I have other positions, and shout out to the missus, because she actually put me on a position the other day, GM, which is crazy because I'm invested in it. It was crazy because she brought it up. I already invested in the company. I have conviction in the company because I'm looking at Tesla, I'm looking at NIO, and then I'm looking at what the incumbents are doing, right? Like the old guard, GM, Ford, Toyota, right? What they're doing in the EV market, right?
Okay.
So I'm looking at all these companies and I say GM is the best positioned to make a move higher. Like they're the best position to be a competitor, to survive this transition. And we're talking, and she says, "What do you think about GM?" And I said, "You know what? I invested in a company. I never even thought about buying the calls on them." I go and look at the stock, and I'm like, "This stock looks like it's gonna boom."
Okay. Hey.
And it's not too expensive. I said, "Let me go look at the options." I go look at the options. The options ain't too expensive. Let me go and see what I can get. So I go look at 2023 because we're making the transition to EV. It's happening, whether you like it or not, right?
Oh, yeah, for sure.
So GM, and it's funny because I'm explaining something to her on the phone, and I'm saying to her, well, GM, they have their gas car. They make cars. This is what they do. They make so many cars. Well, GM's worth, I think, $60 billion, right? But GM has a division within itself. I'm sorry, excuse me, worth $82.5 billion right now.
Damn. Okay.
GM has a division called Cruise. Okay. It's a company that they bought. They still take investments as if they're, an independent, a startup. This company within GM is valued at about $30 billion. I said, so if GM's worth 60 and this company's worth 30, and I don't think anybody's accounting for the 30 billion in the 60 billion.
Right.
So that means GM is undervalued.
And they got plenty more room to grow.
Right. Because if you look at Tesla, one of the things with Tesla, people always be like, well, they're going to have robo-taxis and autonomous driving and this and that, right? And they give them these crazy multiples that they're worth, right? They always say, Tesla's worth so much more because of those things. I'm like, well, nobody's saying that about GM. Right? So I'm like, let me invest in GM.
Let me get a piece of that pie. Yeah.
Because I've heard about their self-driving and all that, and it's supposed to be crazy. So if they're so good, they're not just trying to create it themselves. They went and bought a company that was doing it. And that was good at it. So, all right, they bought a real competitor, and it's worth $30 billion now, and nobody's looking at that. All right, yeah, let me go ahead and buy GM.
You know why I love that story, Getz? I love that story because that is an example of what due diligence looks like. That's an example of what smart money investing looks like. It's not just jumping on something because of a whim. You got to tip from the misses. Then it's like, all right, let me look into what's going on. Okay, I see this, I see that. It looks undervalued. This is going on. EV is the wave. Okay, now I'm going to make a decision. You didn't make a decision just because you saw, Joe Blow say it on the street. Like you looked into it, there were so many other factors and indicators that suggested to you this might be a smart money move. So you got in. And that's the whole point of a lot of what we talk about on the podcast. It's about go ahead.
Yeah. Now I was gonna say, and And I've been up on it since I bought it. So.
And you've been up on it. So that smart money made money. It's not a joke. Like, this is real talk. This is that was such a good point. That I think that point you just made is everything to the listeners. Not only are we saying it was a smart money investment because of the due diligence, the main point is you've been up ever since you bought it. That's the whole point.
Yeah.
So
yeah,
I mean,
before January 2023, I'm sure it'll come back up, and I'm hoping that I'm not gonna lie, I hope that it drops because I want to buy more.
You want to buy that dip?
I want to buy that dip. I have other positions that I've been up on, and I've done nothing with them because I've been waiting for them to drop, and now it's like. Now there's you've seen the market's been crazy.
Yeah, definitely.
So as the market's had these dips, I've been buying a little bit, because, and like I said, I'm going out 2022, 2023. I'm like, when the craziness is over and these companies prove themselves, I'm going to eat good. It's going to be steak and lobster all day. Right?
Yep.
So, so I'm hoping. It's like I was mad that this went up so fast.
So you couldn't get more.
Yeah, I'm like, I can't buy more because it's up so much, right?
Right.
And, thank you to the missus, but I'm like, I can't buy more because it's up. So I'm like, I'll hold it, but if it dips, I'm going in even more. Like I hope it dips soon. So I can buy it up, so that way she can get a nice birthday gift, Christmas gift, whatever,
Today's episode is brought to you by PT Solutions. PT Solutions is a business consulting firm offering innovative solutions to help strengthen your business. Now, what does that mean? It means infrastructure. It means support. It means coaching. It means development. It means advertisement. It means ensuring that your company gets to where the money resides. Contact PT Solutions today to get started. www.dcbizpros.com. And it's crazy because you touched on something that's so crucial. You mentioned how the missus brought to your attention GM. And when it comes to investment in these stocks and these cryptos and whatever, word of mouth is crucial. Like, word of mouth will get you into a stock that'll have you soaring and taking off if you do your due diligence once you get that stock tip or hear that rumor from whoever it is. Right. I say all that to say this. I have a company that I want to mention on the pod. The company is Vaxart. VXRT is the symbol. They're a medical company, but they've been dipping and dabbling in the COVID vaccine. And what they do, they provide a vaccine that you can take by mouth as opposed to injection, a shot. And it's been taken off lately. Here's how I found it. And again, I'm into a lot of different groups on Facebook, on Twitter. I'm in a group on Twitter called, and let me find it because I want to be very specific and intentional about this. It's called Brothers and Sisters Stock Talk. Brothers and Sisters Stock Talk only on Facebook. And they have a couple admins that I mess with that give a lot of good info. And about a month or two ago, and correct me if I'm wrong, I think I mentioned Vaxart to you a while ago.
You did.
And I mentioned it because I got it off of this Facebook group. And I bought 100 shares. I'm very transparent. Bought 100 shares back when they were at $7. This company is now up to $10 and
almost 11.
Almost $11. They've been taking off lately. And it's like, okay, maybe it looks like those tips that I got from the Facebook group are actually coming to fruition, and this was a smart money investment. So I just want to read something really quickly about what this company is doing. Because again, I think it's all about the news you hear, the value in that news, and where's it going to go in the future. Do your due diligence. But here's what Vaxart is talking about. This is a quote. Needle injections present a barrier to getting people vaccinated, and we have a solution that we believe will be effective and would allow people to avoid injections they don't want to have. Vaxart CEO Andre Floroi, that's a tough name, Andre Floroi said in a press release recently. That just came out on April 30th. And the stock has been taken off as of the last couple of days. And I think it's a big component of the COVID vaccine. They have, I guess they're offering a mouth version of the vaccine. It's just a tablet you can take that they're looking to get FDA approved X, Y, and Z. But it's been taken off lately. So that's something you always want to consider. Get yourself acquainted with different groups. If you're on social media, if you're not on social media and you're into stocks and trading, you should get on social media, even if it's just for that, because there's a lot of different groups where you can hear a lot of different talking. What are people doing? What are people thinking about? What cryptos are they getting into? What stocks are they getting into? What are the new hot topics? Yeah. Vaxart was a hot topic months ago for me. I heard about it. I jumped in off the strength of the brothers and sisters stock talk on Facebook. I'm not gonna lie. That's how I got in, and that's why I told you about it. Now I'm in over 100 shares, and I'm seeing the fruit of that labor.
Right.
So that's just a tip for everybody out there listening. If you want to be an investor, you need to be into the circles of investors. Right. That way you'll get tips that you might not have heard of before. Yeah. Vaxart, VXRT was a tip I heard of. I jumped in, and that was taken off. There's a lot of news and chatter that I might be really going up this week. I'm looking forward to it. I'm in it. So whatever happens, I'm already in. But the fact that they're a part of this COVID vaccine, resolution for the whole COVID pandemic, that already intrigued me. So let me also say, I didn't just jump into Vaxart because I heard about it on this Facebook group. I heard about it, and then I did a little due diligence. What do they do? What is their purpose? Where are they trying to go in the future? I liked everything I heard and read about, so I jumped in. And this is why I think you mentioned earlier, you don't want to be an emotional investor that jumps out because the stock dips. Because Vaxart was down to $5 like a couple weeks ago. Did I sell my 100 shares? No. I held on tight because my conviction was like, you know what? They're doing something that could be powerful in the long run. Let me just sit and wait and see. Because nothing's come out in the news that would suggest this company is about to go bankrupt or that it really should tank. They haven't been rejected by the FDA. Nothing that negative hasn't happened. Let me just sit and hold.
Right.
I sat, I held, I waited on the sidelines. Now look, it's up to 10. You're saying it's close to $11.
Right.
So now we'll see what happens. So it's a couple nuggets to take from that. Make sure that you get involved in different groups on social media that talk about stocks. That way you're able to gain understanding and ideas of new things happening. You can also ask questions to the admins or just to different people in the group that have different levels of investment know-how.
Yeah, and you know what? One thing I'll say is it's not always as human beings, as people, we look for people to validate what we're saying or doing, right?
Mm-hmm.
But as an investor, you should also be looking for the person who's going to break down your theories and your conviction.
Yes.
So if you get into one of these groups and you can find the person or people that actually break down your theory or your conviction, that's actually a good thing too, because you have the other side to look at too. You want to look at, you want to be well-rounded. So if you can see all three sides of it, right? Because there's not just two sides to a story, right? if you could see all the sides of it, and you could see the positives and the negatives, now you can make an even more informed decision on what you're doing, on your investment.
Absolutely.
If at the end of the day, if somebody comes and they say, and they've given all the negatives, and now you can go through those negatives and you can study all of those and say, I still have high conviction in this. Now, even more so, I can double down.
Yep.
You know, but if they come with all the things that you didn't know or you hadn't thought of, and you look at it and now you're concerned, all right, now maybe that drops you from a high conviction to a medium or low conviction in that stock or that crypto or that business or that real estate. You should be able to look at all sides of it.
Always.
You know, always. If you've got your blinders on and you're just like, I'm going for this, and you're not looking at you're not listening to what anybody has to say, you're not looking at you know anything else outside of what you've already decided, then that's on you at the end of the day if you lose. But if you're able to take in all that information and then make an informed decision, you know, then you're better for it.
No question about it. You're better for it, and you can now consider yourself in the smart money category. Right. Because you've taken everything into account. You have some opinions here from some people that have some good knowledge. You've done a little research from Google, wherever your platform is. You've done your research. You've seen these convictions from other people. Now you can make that decision, and now you're a smart money investor. And that's the whole point of everything we're talking about. We want people to be smart money investors at the end of the day, because I think that's what we are. Actually, I know that's what we are. Though we may still lose and win on occasion, but we're still smart.
Wins and loses too.
Absolutely. Yeah, scared money don't make no money. That's just the fact. So you're gonna lose money if you want to make money. You're gonna spend money, you're gonna lose money. But if you continue to be a smart money investor, you're gonna come out on the right side of the road. You're gonna come out where you want to be if you're doing your due diligence, if you're doing your research, if you have all the indicators in place, you're gonna be fine. But the point is taking the time to put all of those indicators in place, all that research in place, looking at these different Facebook groups. And don't think that these Facebook groups aren't pivotal and essential to what you're doing. Because if you're a newbie, join some Facebook groups, join some Twitter groups, whatever it is, join a group, create your own investment group that'll allow you to pitch ideas off of each other. Right. That way you're getting more information to help you make a knowledgeable decision. Because that's what we want to do at the end of the day, guys. Make knowledgeable decisions. You feel me?
Yeah.
Speaking of knowledgeable decisions, are you tracking what Jay-Z, Sean Carter, aka Hove, has been doing lately?
I seen a little something he doing. He making some moves.
He's making smart money moves. So he recently sold Tidal, or a good portion of Tidal. I think he sold like 85% of Tidal to Square, which owns Cash App. He sold that to them for like $350 million. Right. I'm not mad at Hove, because Hove has been an inspiration for me for years. Like, I've been listening to the music, and as of late, I'm just watching the business moves, and it inspires me on a daily. It inspires me because I see somebody that looks like me that's making these smart money moves that lets me know if I keep grinding and continue on a certain trajectory, I can get to that level. And it may seem far-fetched at this time, but he's showing me that there's nothing far-fetched for us. You feel me? Nothing's far-fetched. So when I see that he just sold Tidal for $350 million, and I think he also sold his what was it? Duce? Not Duce. What did he sell?
Nah, Ace of Spade. He sold 50% of Ace of Spade, I think it was.
For a nice chunk. A nice chunk. So he's making big smart money investments, smart money moves I just wanted to bring it up because what are your thoughts on that? My thoughts are Hove continues to impress. Hove continues to make these moves. He continues to be a beacon of hope and light for people that look like us and move like us and talk like us. You feel me? So
Yeah.
I'm just happy to be able to watch it and see that he's still around doing his thing, and it motivates me on a consistent basis.
Yeah. I mean, I definitely agree with all of that. I look at, as an investor, I look at the other side of it too. I'm looking at Square, and I'm trying to make sense of the sale and what they're spending. And I find something interesting right now. A lot of people, what came up a lot when I was looking into it was NFTs.
Okay.
People talk a lot about NFTs, and as far as Tidal and the minority owners in Tidal, and there being an opportunity to make money with NFTs because you have, when he first bought it, it was, I think it was $56 million he bought it for, and then he gave minority shares to a whole bunch of artists.
Yep. And
with the sale, from what I understand, they still have a stake in it.
They do. Yep.
And so if Square, if they're looking at the opportunity with crypto and the blockchain and NFTs, and they say, you look at, there's a bunch of artists have sold NFTs, right? And if this is their in to become an NFT marketplace, then maybe that makes sense. Because as a financial company, I'm like, why did Square buy Tidal?
And Jack Dorsey did some time. I was actually looking at his Twitter feed. He gave a whole rundown on how he compared it to Cash App and how it allowed the small time business person to kind of, I guess, experience a certain level of transactions through Cash App. And he found a way to relate that to Tidal, and how Tidal, the whole thing was about allowing the artists to really reap the benefits of the creation and the creativity they're putting out into the world. And Tidal gave them a certain platform, the same way that Cash App gave business owners, small business owners, a certain platform. So I'm not saying it verbatim, but Jack Dorsey definitely gave a nice little, and check it out on Twitter if you're listening out there. He gave a nice little rundown on how he compared the Cash App game to the Tidal game, and how Tidal relates to the artist and how Cash App relates to the business owner. So definitely check that out, because he did kind of break it down why it made sense for him and why he was excited about the partnership.
Yeah. And that's what I think we got to wait and see.
Okay. What
they have up their sleeve. Because, I mean, if you look at Jack Dorsey and what he's done with Twitter, which I kind of compare it with Steve Jobs, right? Steve Jobs with Apple, it's like this. Apple started, and then eventually they got to a point, and the board fired Steve Jobs, and Apple was failing, and then they brought him back, and
it's
then
so crazy. How you gonna fire Steve Jobs?
Right. But they fired him at one point, and then they brought him back, and look at Apple now, right? And then you look at the same thing happened with Twitter with Jack Dorsey, right? But while he was gone, he started Square, and Square has been thriving.
Yep.
And Square's getting bigger and bigger, and there's so much potential with Square still. And he still catches slack, even, at one point he said he was going to move to Africa, South Africa, whatever it was. Right. And he caught a lot of slack for it. Because it's like, how are you going to run these two companies and you're in South Africa and you can't be there for, board meetings and this and that, whatever. But Jack Dorsey, as the CEO of Square, what I understood, without him saying it, was this is the next hub for, for capitalism.
Yep. Exactly.
There's money to be made here. That's why I'm moving here. And I feel like it's kind of the same thing. It's like with the title move, it's like, well, maybe he sees there's money to be made here with NFTs or whatever it is, because you have access to the artists who have a stake in the company.
Yep.
Right? Because if you look at it, Tidal itself hasn't been the most successful at all by any means. Right? They sold
platform.
Right. They sold a third of the company to Sprint for $200 million, I think it was, which, so the company was valued at $600 million at one point. And now Square buys 80% of the company for $350 million. So you're saying, the value has come down on the company. But for the board, not just because it's not up to the CEO, the board has to approve it, and shareholders technically have to approve these things.
Yep. Technically,
right? So now they bought this company, 80% of this company, for $350 million. So you're saying, there's got to be an end game. They're not just buying them, they could play the game, and it could just be that, that they're good, them two are tight, and it's just like, yo, I'm gonna get you out of this bind, like, don't worry about it. That could be the case, but they're public companies, so
right.
So there are people you have to answer to.
Yep.
So the question is going to come up: why did you buy this company? So there has to be something behind it. So I'm curious to see what the why is, because I feel like it has something to do with crypto and NFTs and things like that, or it could even be ticket sales. Which, if right now, you look at, while everything was closed and things are down, you can get companies like that on the cheap, right? But then when they reopen, if I buy it now on the cheap, and then let's say I integrate concerts and things like that into that platform, well, now the platform is going to be worth more.
Right.
So I'm immediately going to get a return on my investment when things return to normal. Right. So that's one of the other things I was thinking of, because, I know, Rock Nation has its, and I know that's a separate company, but I know they have their concerts and stuff like that.
That's true. They could end up merging some things. And I even saw that it looks like Hove is actually going to be on the board of directors for Square, which is it's just another boss move, man. It's just another smart money move that I'd love to see. I'd love to see Jay making.
Yeah, and anybody on, if you're on the board of directors, then they're giving you an incentive to be on it. So so he's getting shares of Square, which has this huge runway. Yep. To be so much bigger. So it's worth so much more. It's like, it's worth on paper. You're giving me this much now. But now
what's it gonna look like? Yep.
Yeah. In the future, this is gonna be worth. This is depending on my conviction. This is gonna be worth some X amount more in the future. And I pay attention to that when I walk into a store. I pay attention to who is processing their payments. I walk in the store and I see, because I use Square when, as a business owner. So I know a Square terminal when I see one. Okay. I know if it's Square or Clover or one of these other companies, right? Clover would be First Data. So, which is another publicly traded company. So when I go and I look at these, when I walk into a store and I see they don't have a normal, I think it's NCR is the old school processing, register, right? when I walk in the store and I see, all right, it's not an NCR. Now I'm looking, all right, is it Square, is it Clover, or is it Toast? You know, which is another one. Toast is usually for, you know, restaurants.
Right.
So I'm looking at that. Now, if I see they're using Square, I invest in Square. I bet they're using Square.
Yep.
You know, sometimes I walk in a place and they're using Toast, and I'm like, man, I want to say something.
Like, why y'all got Square in here?
Right. Yeah, I think y'all need to make a switch. You know?
Word.
You know, it's like, you know, it's we talked about those on the last pod. We talked about those channel checks, right?
Mm-hmm.
That's what I do.
Mm-hmm.
I walk into these places. You walk into the bodega, because you walk into the bodega now. The bodega's using one of these, right? You know, so you walk in a bodega, and are they using Square? Are they using Clover? Who they using?
I promise you, Gets. Next time I go into the bodega up the street, up the block, I'm going to find out. And if they don't have Cash App, they don't have Square, I'm gonna say something. Why don't y'all got Square? Who is this y'all using?
Right.
What's going on?
I've actually gone. I was actually I was dealing with somebody. I was buying tools, right?
Mm-hmm.
That's what I do. I turn wrenches.
Okay.
So I'm a mechanic by trade. So I'm buying tools from somebody, and I go to pay for the tools, and he pulls out something. I forget what company it was he was using, and it was a whole process. And I said, "Why aren't you using Square?" and we got into a whole discussion, and I broke down to him why he's fucking up.
Mm-hmm.
Yo, what percentage are you paying? Right? Because I'm like, you know, I knew the numbers, right? I'm like, what percentage are you paying? I'm like, are you paying a month?
And that's something somebody like him, who's the business owner, he can understand and respect when you're saying what's the percentage you're paying. Like when you break down those numbers of what's coming out of his pocket, he can pay a little more attention.
Right.
Okay.
Right. Because I'm like, yo, you know, I've dealt with ADP. I've dealt with Fresh Data. Right. I've dealt with all of them. I've dealt with merchant accounts. Mm-hmm. Right. So I understand paying a monthly fee plus a percentage on top. You know, I understand all that. Mm-hmm. So it's nothing for me to go and talk to someone and be like, you know, what's your monthly fee? What percentage are you paying? You know, all those things. You know, is it a sliding scale? This, that. You know, I'm going through all that with him, and he's looking at me like I'm crazy. You know, but it's like, nah, let's talk about it. Let's talk about how you could do better. You know what I mean? So, you know, that's something to think about. So, you know, I look at Square, I look at the sale, you know, with the sale of title to Square, it's like, all right, what's the future look like for that? Is that a catalyst for Square? Square already has a bright future. You know, same thing. He sold Ace of Spade. It's like, all right, the company that he sold them to, I forget the name of the company right now, but it's like, is it a tailwind or a headwind? Is it?
Today's episode is brought to you by CyberGuys IT Solutions. CyberGuys IT Solutions is a technology support services company offering a wide variety of IT solutions for both business and residential clients. Whether it's file and print management, malware prevention and removal, network monitoring and maintenance, as well as software and hardware installation and troubleshooting, CyberGuys IT Solutions is the premier company for all of your information technology needs. Contact CyberGuys IT Solutions today to get started. www.cyberguysdmv.com.
That monthly payment is, what that fee looks like for somebody that's not using Square or Cash App is a huge difference as opposed to if they were using Square or Cash App. because I think that's really where you're going with it.
Right. You got the monthly payment, you got the percentages you paying. I mean, as a business owner, these things matter.
Yep. Yep. They matter. And they really matter to us because we are investors in fucking Square and Cash App. So, yes, we want you to be using our platform and not anyone else's. Not only because it puts money into our pocket, but it also helps the business owner because it's a better service for you.
Right. That's a catalyst. If Square was charging 10 times more than everybody else, then there'd be no point in using Square. But
they're user friendly. They're business owner friendly.
Exactly. It's the ease of use. It's the cost difference. There's all these things. These are all catalysts to continue to push Square higher and increase their revenue. Because they increase the business owner's revenue. They keep let's lower the overhead of the business. Because you got to think about all these things as a business owner. It sucks, but you got to think about it. It's not about just how much you spend up front. It's on the back end.
And not only that, Gets, and I kind of want to pull this back to what we were talking about with Hov. If you're a business owner, and correct me if I'm wrong, Gets, but at the end of the day, the real end game is to sell that business for a high price more than what you put into it to begin with.
A high multiple.
So when I see Jay out here selling Tidal for 350 mil, something crazy like that, that's kind of like with my company, Nice Touch Editing, I want to eventually, years down the line, I want to sell that to somebody for a nice piece of profit.
Right.
And be done with it. Right. Although I love what I do, I would love to sell my company for a higher profit and be able to live on vacation.
Right.
At the end of the day, that's why you're in business, to sell that company at some point.
Yeah. I mean, it's the same thing. You look at Nas with the investment in Coinbase, right? They say the investment was less than $1 million. And you got $100 million return on it?
Which is why in the latest track, and again, we're not a hip hop review, but in his, I don't know if you heard the track with him and Hov on that Khaled album, what did he say? Fuck a coin toss, I'm Coinbase. Call me the cryptocurrency Scarface. He went on something else. Oh, okay, Nas, I see what you're doing.
Yeah, which it was a controversial line, but
very, very controversial. But But the ultimate point is he's making money off of Coinbase and he's putting that into his rhymes. I can't be mad at that at the end of the day. Whatever controversy you want to lay onto it, that man's talking big money that he's making and he's putting it into his artistry, into his craft. Right. I can't hate on that.
Yeah.
Nah, so I'm not mad.
And there's a lot of companies made a lot of money on that. And but he spoke on it, Yeah. I mean, and that's the end game.
Yep.
You invest in a company, whether you invest in a public company or whether you invest privately, that's the end game. You want that return.
Yep.
You're not doing it just so you can throw your money in a barrel and burn it.
Yep.
You want that return.
You want that return. You want to get your money back. But at the end of the day, cuz you, me, Ib, Gets, we are not financial advisors. We are not here to tell you what stocks to own, what stocks to sell, what stocks to buy. We're just two people that love investing and we love to talk about it. But that at the end of the day, you have to do your due diligence. You have to trade at your own risk. You have to understand that it's levels to this thing. So you got to be able to come out and do your own research and trade at your own risk. But we love to talk stocks. We love to talk investments. We love this episode. We've talked some great stuff today, guys. We want to make sure you follow us on social media. We on Instagram at IB_Gets_podcast. We're also on Facebook, Stocks is Talking Podcast with Ibn Gets. We're also on Discord. Guests, how can they reach us on Discord?
Yeah, hit us up on the socials. We'll send you an invite.
And you can come chop it up with us. But at the end of the day, we came, we saw, we conquered. That's it. That's all, folks.
We out.